Good morning, I'm James Gruber. Welcome to the Morning Report for Wednesday the 4th of March. Since we last spoke, it's been a wild ride in markets with the escalating conflict in the Middle East. Overnight it was tit for tat as Israel struck a meeting to elect a new supreme leader in Iran, while a drone strike hit near the US consulate in Dubai with no reported casualties. Australian shares are poised to open lower with index futures down 1.4%, following a spike again in oil prices and a slump on Wall Street. As for the ASX 200 yesterday, it closed down 1.34% to 9,077.3. The financials and consumer discretionary sectors were sold off, with the energy, materials, consumer staples and IT sectors making gains. Given the trends overseas, airline and travel stocks like Qantas may struggle again today, and some of the gold and copper miners may pull back after recent gains too. Commodities will be in everyone's sights because of the impact of the military action on key supply areas for oil. Global oil prices kept climbing overnight. Tankers and container ships are avoiding the Strait of Hormuz after insurers stopped coverage for vessels. The strait was officially closed by Iran after I spoke with you yesterday morning Australian time. Concerns are increasing, as you'd expect, after reports that Iran will fire on any ship trying to pass through the key maritime route, which carries roughly 1/5 of the world's total oil supply. Crude oil climbed to its highest levels since November 22, rising 3.7% to $80.83 a barrel. However, those crude futures were up more than 7% at one stage. What do higher oil prices mean for drivers here in Australia? As I mentioned yesterday, when the price of oil rises, it usually translates to higher petrol prices. As a rule of thumb, each $10 US a barrel rise in oil can add 10 cents a litre at the pump. But I've noticed in my neighbourhood that Bowser prices are up 40 to 50 cents over the past 24 hours, much higher than our rule of thumb would suggest. Higher oil prices aren't good for inflation either, and that ultimately has a bearing on interest rates. RBA Governor Michelle Bullock said yesterday that she was keeping a close eye on oil prices and that the RBA's March meeting is a live meeting for whether rates should rise or not. Gold futures slid on Tuesday, weighed down by a stronger US dollar. The futures were last trading down 3.7% to $5,119 an ounce. Yesterday, we were talking about investors participating in safe haven buying when it comes to gold. But when the US dollar gains strength, gold and other commodities can falter. Why? Because commodity prices typically fall when the US dollar rises, because most commodities are globally priced in US dollars. A stronger dollar makes commodities more expensive for international buyers using foreign currencies, reducing demand and forcing prices down. Base metal prices were mixed. Copper futures were down 2.1% due to the stronger US dollar. Meanwhile, aluminium futures were 1.8% higher on supply concerns. Iron ore futures were 0.5% higher to $99.57 a tonne. Let's look at currencies. The Aussie dollar paired earlier losses, but was still down 0.3% to 70.39 US cents on strength in the greenback, as I mentioned. Let's go a step back to see how Wall Street and other world markets finished the day. On Tuesday, the Dow Jones Index was down 0.8%, the S&P 500 was 0.9% lower, and the Nasdaq Index fell 1%. There are some developments worth highlighting. Okay, at least let's take a closer look at the day there. The S&P 500 hit its lowest in over 2 months, but bounced back from heavy earlier losses. Investors brace for the impact of a widening Middle Eastern conflict on oil prices, inflation and global trade. Tehran's threat to attack any vessel attempting to transit the Strait of Hormuz, combined with production halts by several Middle Eastern oil and gas producers, has driven up global shipping rates and prices of crude and natural gas. Industries such as airlines and travel were knocked for a second day, with Norwegian cruise falling 4.1%. Technology stocks fell 1.1%, with Nvidia slipping 1.3% after gaining in the previous session. Meanwhile, the private credit market was rattled after Blackstone's flagship credit fund, BCRED, saw a surge in redemption requests. Blackstone slid 3.8% and Blue Owl Capital lost 2%. MongoDB shares plunged 22% after the database software company forecast quarterly profit below estimates. US government bond yields were higher on Tuesday, even as investors started to push back expectations for a 25 basis point interest rate cut by the Federal Reserve to September from July, given fears about the conflict fueling inflation. The US 10-year Treasury yield was up 1 point to 4.06%, while the 2-year Treasury yield was up 2 points to 3.51%. To the European markets, they fell on Tuesday as investors assessed the prospect of a prolonged Middle Eastern war. Many regional bourses and sectoral indices clocked their sharpest one-day fall since April. Every sector of the broader European index was dragged into the downdraft, led by financials. The banking index sank to a near 3-month low, with UK-focused lenders, seen as more exposed to Middle East risk, taking the hardest hits. HSBC was the biggest weight, down 5.2%. Spain's finance-heavy benchmark fell 4.6% to its lowest since mid-December, while Germany's export-heavy DAX hit a 3-month low. The continent-wide FTSE Euro First 300 index finished down 3.1%, while the UK FTSE 100 dropped 2.8%. So what are we watching for today? In Australia, economic growth for the fourth quarter will be released today. CBA economists have lifted their fourth quarter GDP estimate from 0.7% to 1%, or an annual rate of 2.7%. They say at this pace of economic activity, the Australian economy is running well above its speed limit. And while they favour May as the most likely outcome for the next rate hike, recent data flow lifts the risk of March. Money market expectations for a March rate hike have now risen to 33%, and for May it's 100%. Alcohol retailer Endeavour Group will also release earnings today. In the US, economic data includes ADP employment changes for February and the ISM Services Index. Chipmaker Broadcom will also release results. That's it for today. For further developments on the local trading session, please tune in to the CommSec Market Update podcast this afternoon and, of course, the Market Close video. Have a great day.